monthly OpEx behind us, and Monday is only going to be, October 18th. So we probably have a 5-week October here for us. Yeah, because I think Halloween is on a Sunday, and it's not next weekend, it's the weekend after that. So we're going to have 5 weeks to trade October. Okay, here is the intraday chart. Here was a second day in a row, gap up open on Friday over here on the left side of the chart. Our actual open on the S&P 500 was 44.47, but the settlement for October was all the way up at 44.63. This is probably the main reason we had a 2-day gap up open going into OpEx. It was a short covering rally because the sum of the parts on the S&P 500 really is valued at this, whereas it was trading and closing all the way down here on Thursday at 44.38. And funds and players who were shorting calls had to get out of here and had to cover. And hence this big 2-day rally with 2 gaps up and some very bullish stuff going on the daily chart, which I'll show you in just a minute. But let's go over the intraday action. Gap up open, move up to the initial bounce high. The initial bounce high was a takeout of the last bounce high. So a higher bounce high over the one we made in September. That's very bullish. Came back down, had this our deepest dip for the day was this one here, going into the end of the initial balance period, down to about 44.57 and change. By the end of the day at 2 o'clock Eastern time, we rallied up out of the initial balance range, finally made a new high for the day, churned back in here, but at the end of the day, came up over the 20 EMA indicator line, closed outside of the initial balance range, and made a second daily close in a row above the 20-day as well as above the 50-day. Second close in a row and a weekly close. So here are the SMAs underneath the surface. Here is the 10-day crossing up through the 100-day that had been on Thursday's open, helping to fuel this gap up. And as we go into Monday, we're going to have the 10-day rising up through the rising 20-day. That is a very, very bullish signal, just as it was a very bearish signal in the cross down back here that resulted in 2 very big monthly lows. Here we are going in for a bullish cross up through on Monday morning. Also note that in our bounce all along here was the September bounce, and we took out this high on Friday, as I just mentioned, but these bounces failed miserably against the 20-day. These initial attempts here back at the beginning of September failed against the 20-day. Well, here in October, we finally took out that 20-day, but look at this manipulative stuff. This big high up here, which was a fail against the 50-day, and then sellers hit it and closed us maybe a point below the 20-day. And that led to some 3 days of selling once again, until finally this week we had this flush out on Wednesday. We saw that, I was tweeting that morning, we saw big volume rising in the 43.25 puts, and they were going up between $20 to $25. And then we reversed and this rally began because those were sellers in there creating that volume, or people just getting out of those puts, going to futures and fueling this push down so that they could resolve their long put positions. And we rallied up out of that and never looked back. Okay, so we've got our 10-day crossing up through our 20-day. We finally took out the 20-day with Thursday's open and closed above it for the first time since all the way back here on September 9th. First close above the 20-day. And not only that, but we rallied up and closed above the 50-day as well. And we followed through with that on Friday with a weekly close and a second daily close in a row above both the 50-day and the 20-day. So people who don't understand how to read charts are not going to see the fact that this is going on under the surface and realizing that this is a very bullish thing that's happening. And our target, as I mentioned a little earlier in the week, in fact, it was this day here, I said if we take out the 50-day and close above it, we're probably going to go after that set price, which we did, but we're probably also going to have an end-of-the-line target of a double up from this major low, this big swing low that we made for October, to where we took out the 50-day, which was on Thursday, the 14th. It was at 44.36. We're going to take this move from here to there and double it up, and that is going to get us to a new all-time high around 45.93 to 94. Okay, as long as we hold this 50-day on a closing basis, that is our end of the line target. We may chop a bit in order to get there. We might rise up to this all-time high and try to make it look like we're taking a, making a double top and falling back. But as long as that 50-day holds on a closing basis on those dips, we are going for a double up of the move from this low to taking this out, because there is always a group of more conservative players out there. They're waiting for these more aggressive players to advance the ball, and then they are going to buy and buy and buy and buy every dip, and they want to make what these guys made. So that's what creates that double up, and it happens all the time. We've seen this happen year after year after year. We might rise even higher than that level, but we are going to at least reach that, is my opinion, before this rally stops for the year. All right. If I am wrong, and for some reason we come back this week and break below this 50-day, then obviously our next move is going to be to try and hold that 20-day. The 10-day is going to be up through it on Monday, so first it's going to be the 10-day. Maybe it'll be an effort to stave off the 10-day from crossing up through the 50-day. Maybe there'll be an attempt to try and do that, but as long as that 50-day holds on a closing basis, the dips are going to get bought. We're going to continue rally. If the 50-day fails on a closing basis, then we'll have the 10-day, which will be up in here somewhere, then the 20-day, then the 100-day. And, of course, eventually we would have a test of this October low. And we still have not resolved the ES October low, which was at ES 4260, and that happened in an overnight session earlier in the month. If we don't resolve that early in the age of this contract that we are in now, the December contract, the longer it takes, the smaller the spread is going to be, and the lower we will go towards that 4260 ES to resolve this. Because right now the spread is like 10, 11, 12 points when we get down here. So it's only going to take maybe 4270 to resolve ES 4260, which will only be a small break of this October low. But if it takes until the end of the year to get this done, then we are going to break down close, lower and lower. Maybe we have to get down to about 4262 to resolve that, and then we'd be all the way down maybe around here, testing closer to this July low. So food for thought on all that, but that's only if we break the 50-day on a closing basis. If we hold the 50-day on a closing basis, the path of least resistance is going to be higher. Let's take a look at the options real quick, and then we're going to review the intraday chart. On Friday, your 4,400 puts were your volume leaders. Those closed in the $8 window. Your 4,500 calls were your volume leader. Those closed in the low $11 window. Those are the 2 points I would be looking at, 4,400 and 4,500 on the calls as we go into Monday. Let's take a look at the intraday chart and give you the concrete levels to look for. Oops, my chart kind of flaked down on me for a second. Your very first line in the sand, line of support, is going to be this 44.65 level, this old bounce high, and your 80 handle rule. So from 44.65 to 60 or so, and if that breaks, then we're going to test this low that was made earlier in the day at 44.57. So just use your 80 handle rule. We got to hold those 44.60s open, buy that dip, and let's go. If we were to dip down here to these 44.60s, maybe those 4,500 calls dip down to the $8 window, hold the high $8 window or so, that is your signal. Those are your ones to buy that dip for that rally towards 45.90, 93 to 94 to be exact. If we break down below this 44.57, then we're going to come down to test Friday's low and try to hold open this gap. That would be all the way down here to the low 44.50s on down to the open and the low of the day for Friday at 44.47 and change. Okay, as long as Friday's range holds, we're simply in an inside day for Friday. You should be buying that dip because that 50-day simple moving average is going to keep rising. It's going to rise up through this gap as the week goes on, and probably by the end of the week, the 50-day is going to be all the way up here, holding open this gap. And as long as this gap holds open, as long as that 50-day holds on a closing basis, you should be buying dips for the move higher. If you disagree with me and you think this is all going to break down, then you should be looking at those $8 4,400 calls. If those aren't $8 on Monday, if they've decayed below the $8 window, then you need to be looking above 4,400. okay, and buying above the 4,400 level on puts. And your targets are going to be to try and break down below the 4460s, break down below the 4450s, and break down into this gap and try to break the 50-day on a closing basis. But if we hold the 50-day on a closing basis, you've exhausted your move for those puts. You should close them and flip to calls or short against them to be long biased. Hope that all makes sense. Hope this video helped you out and gave you what you need to get a good start on the week. Make sure and check the data. There is some Chinese inflation data coming out tonight. It's Monday, and we've got some new manufacturing PMI data coming our way Friday this coming week. Make sure and check the data. Have a great rest of your weekend. As always, good luck and good trading.